Viewers at home, you are welcome to my presentation on correction of errors and suspense accounts. Correction of errors and suspense accounts. In this presentation, I will examine the following. Number one, meaning of error, meaning of errors. Number two, I will examine the types of errors. Three, I will examine the correction of errors. Number four, I will solve examination question. As worked example. If this is your first time of coming across this YouTube channel, or if you have not subscribed in the past, please don't forget to click the red subscribe button and also turn on the notification bell icon so that you'll be able to get a notification message each time I drop a new video. If you are a returning subscriber, I say thank you and God bless you. What is an error? Error or errors. Error is an unintentional mistake. Unintentional mistakes committed when preparing the accounts. Unintentional mistakes committed when preparing the accounts is said to be an error. When we say unintentional, that means you didn't commit it willingly. It just happened by chance. Or it may also happen or occur based on your level of understanding of the accounting principles. Meaning that if you are not versed in accounting, you may be making some errors. Unintentional, that means you didn't commit it willingly. That's why I say errors are unintentional mistakes committed when preparing the accounts. Types of errors. For our purpose, we are going to categorize errors into two. Number one, we have errors that the trial balance will not disclose. And number two is errors that the trial balance will disclose. Errors that the trial balance will not disclose, meaning that even when you commit these errors, your trial balance will still balance. Your trial balance will not disclose these categories of errors. Even when you commit these errors, your trial balance will still agree. Your trial balance will still balance. That is why we call them errors that the trial balance will not disclose. Or we can say errors that will not affect the agreement of the trial balance. On the other hand, we have errors that the trial balance will disclose. Meaning that when any of these errors occur, your trial balance will never balance. If any of these errors occurs, your trial balance will not balance. That is errors that the trial balance will disclose. We can still call it errors that will affect the agreement of the trial balance. That is, your trial balance will not agree whenever any of these errors are committed. Now, I want to start with errors that the trial balance will not disclose. Number one is error of omission. Error of omission. Number two, error of commission. Number three, error of principle. Number four, error of original entry. Number 5, compensating. Compensating error. And number 6, we have the complete reversal. Complete reversal of entry. Complete reversal of entry. If any of these 6 errors are committed, your trial balance will not balance. On the other hand, we have your trial balance will still balance. If any of these 6 errors are committed, your trial balance will still balance. But on the other hand, I want to consider those errors that will affect the agreement of the trial balance. That is, if any of these errors are committed or is committed, your trial balance will never balance. Number 1, we have the casting error. I will still explain what is meant by that. Number 2, we have partial omission. Partial omission. That is, only one aspect of the double entry is kept. So, partial omission. Then the next one is transposition error. Transposition error. Transposition error. Then the next one I'm going to consider is partial reversal. Reversal of entry. Partial reversal of entry. Then I'll also consider the under or overstatement of the opening or closing balance. Under or overstatement of the opening or closing balance. Under or overstatement of the opening or the closing balance. These are the errors that the trial balance will disclose. That is, if you commit any of these errors, your trial balance will not balance. These errors will affect the agreement of the trial balance. I therefore want to start with errors that the trial balance will not disclose. Errors that the trial balance will not disclose. Number 1, error of omission. Error of omission. From the word omit. Omission is derived from the word omit. That is, when you omit something completely. This occurs when a transaction is not recorded at all. It occurs when a transaction is not recorded at all. The transaction is not recorded anywhere in the books. The transaction is not recorded in anywhere in the books. E.g., paid rent by cash. By cash, 1,000 naira. In line with the double entry, this transaction will affect the rent account and cash account. This transaction affects both the rent account and the cash account. Remember the double entry principles, which states that for every debit entry, there must be a corresponding credit entry. Now, when you paid for rent by cash, you are given out cash. That means cash is the giver and rent is the receiver. So cash is the giver, cash goes out and you receive the rent. So remember the double entry, we credit the giver and debit the receiver. Meaning that rent account is supposed to be debited and to credit cash account, but this transaction is not recorded anywhere, meaning that rent account was not debited and cash account was not credited with the 1,000 naira. This transaction was not recorded at all. Now, how can you correct errors of omission? To correct error of omission, just pass the double entry in respect of the transaction. To correct the error of omission, just pass the double entry. That is, you open rent account. You know, rent account is supposed to be debited. You debit the rent with the sum, which is 1,000 naira, and you credit cash account with the same amount, 1,000 naira. This is the credit side, this is the debit side. So here you have debited the rent and you have credited the cash. Your narration here will be the name of the other account. That means you are going to put cash here. Here you put rent. By putting rent here, it does not mean that you are crediting rent. It is cash account you have credited, and it is the rent account you have debited. By having cash here, it does not mean that you are debiting cash. It is the title, that is the rent account, that has been debited. That is what to do to correct the errors of omission. Though I will still solve a comprehensive question as work example. Number 2, error of commission. Number 2, error of commission. I want you to know that these errors are usually committed because of a similar name. That means the transaction is entered in a wrong account, but within the correct class. The transaction is recorded in the wrong person's accounts. The transaction, when you record the transaction in the wrong person's account, but the class of account is correct, but the account, the account to which this transaction was recorded is a wrong person's account. Where this occurs, that error is said to be the error of commission. E.g., example, goods sold to S. Thomas, ₦10,000 was debited to G. Thomas. No, this transaction is recorded in the wrong person's account. The account in which this transaction ought to have been recorded as sales account and S. Thomas account. The transaction ought to have been recorded in sales account and S. Thomas account, but was wrongly recorded in sales account and G. Thomas. So, where this is the case, that means the transaction has been recorded correctly in the sales account. The only account that was affected is G. Thomas. It is not supposed to be recorded in G. Thomas. It is ought to have been recorded in S. Thomas accounts. So the transaction is between these two accounts. And where that is the case, so that means the error of commission has occurred. To correct it now, to correct error of commission, number 1, you pass the entry into the correct account. You pass the entry into the correct account. That is, you record the transaction into the correct account. That is number 1. Number 2, the wrong account, you now reverse the entry in the wrong account. you reverse the entry in the wrong account. That is, where the wrong account has been debited, you credit it in order to eliminate the amount at the debit side. And where it has been debited, you credit it in order to eliminate the amount at the debit side. And where it has been credited, you debit it in order to eliminate the amount at the credit side, and vice versa. Now, to correct this now, remember, S. Thomas account supposed to have been debited. You open S. Thomas account. S. Thomas account ought to have been debited because S. Thomas is the receiver. In line with the double entry principle, we debit the receiver. You ought to have debited the S. Thomas account with the sum of 10,000 naira and credit, and the G. Thomas account was wrongly debited. Since it was debited wrongly to G. Thomas, you are going to credit G. Thomas account in order to eliminate the amount at the debit side of G. Thomas. So you now have 10,000 at the credit side of G. Thomas. So here you write G. Thomas. It is S. Thomas account that have been debited. Here you put S. Thomas. That is the entry required to correct that. That is number 2. Number 3, errors of principle. Errors of principle. Errors of principle. Principle. This is when the transaction is recorded in the wrong class. Underline the word class. It's when the transaction is recorded in the wrong class of accounts. When the transaction is recorded in the wrong class of accounts. E.g., purchase, let me say furniture purchased. Furniture purchased by cash. 200,000 naira was debited to purchases account. Remember, purchasing account means goods bought for resales. When an entity is not into furniture business, if an entity that is not into furniture business now make purchase of furniture, it is wrong to record that as purchases. So instead, it should be recorded as furniture account. But where their primary business is on buying and selling of furniture, then you can record the purchase of furniture as purchases. But their business now is on buying and selling of goods, not on furniture. So where such an entity may purchase of furniture, it will be wrong to record that as purchases. So this transaction was debited to purchases account. Wrong account. Purchases account. And cash. But correct account. It is ought to have been furniture account and cash account. That means the wrong account now. This transaction has been recorded correctly in the cash account, but was recorded in purchase account instead of furniture. So the transaction is between purchases account and furniture account. Instead of debiting furniture, they have debited the purchase. So now, to correct errors of principle, number 1, just like that of errors of commission, You make the posting to the correct account. That is the first thing. You make the posting to the correct account. Then you now reverse the entry in the wrong account. Meaning that where the wrong account was debited, to correct it now, to eliminate it from the debit side of the wrong account, you credit that wrong account. And where the wrong account was credited, in order to correct that wrong account, entry in that wrong account, you debit the wrong account. Now, the transaction is supposed to be recorded in the furniture account. You open furniture account. Furniture account. That is 200,000. You want to debit the furniture's account. Purchases account. It was wrongly debited to the purchases account. To correct that, you credit the purchase account in order to eliminate the amount that have been debited to the purchase account in error. Here you now put purchases, and here you put furniture. I've told you that it is the furniture that has been debited here and not the purchase. It is the title of the account you have debited, and it is the purchase account that have been credited and not the furniture account. Please take note of that. That is error of principle. Error of principle. Number 4. Error of original entry. Error of original entry. This is when the wrong amount is used and passes through the double entry system. The wrong amount is used and that wrong amount passes through the double entry system, meaning that the amount used is wrong, but that wrong amount is used in line with the principles of double entry. The account that was debited with the wrong amount. The account to be credited was credited with the wrong amount. That is error of original entry. E.g., rent paid by cash 1,310 was recorded in the books as 1,130. Rent paid by cash 1,310 was recorded in the books as 1,130. The correct amount is 1,310, and wrong amount used is 1,130. Now, when rent was paid for by cash, the rent, cash is the giver, while rent is the receiver. In that case, we debit rent account and credit cash account. But instead of debiting the rent account with 1,310, rent account was debited with 1,130. That means the amount debited to the rent account was understated. You find the difference between the correct amount and the wrong amount. The amount that has been recorded at the debit side of the rent account is 1,130 instead of 1,310. That means you will need to increase this to 1,310. And what will you do to increase it? You debit the rent account with the difference. The difference is 180. That is 1,310 minus 1,130. Then you have 180 as the difference. That means if you will add 180 to 1,130, then the total will give you 1,310. So in that case, we are going to debit the rent account with 180. Then you credit cash account with 180 in order to increase the amount that has earlier been recorded. That means 1,130 has equally been recorded at the credit side of the cash account instead of 1,310. So you need to increase it by 180 in order to increase the amount to 1,310. So the entry to correct the error is to debit the rent account with 180 and credit cash account with 180. That is how that error can be corrected. But supposing the amount at the debit side is overstated, that is, if this one is lower than this, the correct amount is lower, that means the amount that had earlier been recorded is overstated. In order to correct the overstatement in the rent account, you are going to credit the rent account. In order to correct the overstatement, then you debit cash account. So now the entry required to correct the errors. Now how can you correct the error of original entry? Error of original entry might take the form of undercast. Let me say undercast or understatement, and overcast. Overcast or overstatement. In the case of understatement, you record the amount by which the actual figure was understated. You record it at the right side of that account. In the case of rent account, no, the rent account was understated because the amount recorded is 1,130, which is lower than the actual. It's lower than the actual amount. In order to increase the rent now, you are going to debit the rent account with the amount at which the rent account had been understated. Then you credit cash account with the amount by which the cash account has equally been understated. That is the entry required or needed to correct the error of original entry. Error of original entry. So, but in the case of overcast, no, this is undercast. So the rent account should have a debit balance. That is why we have debited the rent account with the amount at which rent account was undercast, and credit rent account with the amount at which it was overcast. But supposing that the correct amount is 1,130 and the amount recorded is 1,310. That means the rent account, no, this is the correct amount, and this is the amount that have been wrongly recorded. In this case, the correct amount is 1,130 and the wrong amount is 1,310. That means the amount recorded is greater than the actual. That is overstatement. That means rent account had been debited with 1,310 instead of 1,130. And cash account has equally been credited with 1,310 instead of 1,130. That means the two accounts have been overcast. Notice they are the wrong amounts used. You now want to reduce this one to 1,310, which is the correct figure. You want to reduce it. So what you will do is to credit the rent account with the difference, which is 180. Indirectly, if you subtract 180 from 1,310, then it will reduce the amount to 1,130. You also debit the cash account with the same amount. That is for the overcasting. So this is overcast. So you reverse the treatment. Then number 5, compensating error. Compensating error. This is the error. Compensating error is the error that eliminates each order from the books. Errors that eliminate each order from the books is said to be the compensating error. E.g., example of compensating error. We have the sales account. The sales account was overcast by 150 and purchases account was overcast by 150. You know, the sales account will have a credit balance. Purchases account will have a debit balance. Since the sales was overcast by 150, that means since sales is having a credit balance, the amount at the credit side of the sales account is greater than what it will have been by 150 naira. So in order to correct the overcast in sales account, since the amount at the credit side is greater, is too much by 150, so you debit the sales account with 150 in order to reduce the amount that have earlier been recorded at the credit side of the sales account. If purchases account is equally overcast by 150, the amount at the debit side is greater than the correct amount by 150. So to reduce the amount at the debit side of the purchase account, then you credit the purchase account with 150 in order to reduce it to normal. So this 150 will eliminate the 150 here. The 150 overcast in sales account will eliminate the 150 overcast in the purchases account. So if it is undercast, if sales account is undercast, then you credit sales account. And if purchase account is undercast, you debit purchase account. The undercast in sales account will also eliminate the amount of undercast in purchases account. That is compensating error. Compensating error, I said, is the error that eliminates each order from the books. The number 6 is complete reversal of entry. Complete reversal of entry. Complete reversal of entry occurs when the double entry for a transaction is reversed. The double entry for a transaction is reversed. That is, the account to be debited is credited, and the account to be credited is debited, and vice versa. That is complete reversal of entry. Where you are supposed to debit purchases account, you credit purchases account. And where you are supposed to debit the cash account or credit cash account, you debit the cash account. So, you reverse your double entry completely. Your double entry is effected in the wrong side of account. Double entry is effected at the wrong side of account. That is, the account to be debited is credited, and the account to be credited is debited. That is complete reversal of entry. So, e.g., purchases by cash, 700 was debited to cash account and purchases account credited. Remember the double entry principle? We debit the receiver and credit the giver. Cash is the giver, while purchases is the receiver. You are supposed to debit the purchase account. Instead of you to debit purchase account, you now credit purchase account. You are supposed to credit the cash account. Instead of you to credit cash account, you debit the cash account. That means you reverse the double entry completely. The double entry in respect of that transaction is reversed. The double entry is made at the wrong side of an account. How will you correct that? To correct the error, that is the complete reversal of entry, you double the amount involved. You double it, that is you multiply the amount involved by 2 and then put it at the right side of account. You double the amount involved where the error is a complete reversal of entry, where the double entry in respect of that transaction where it is made at the wrong side of the account, you multiply the amount involved by 2. Then you now put it at the right side of that account. That is, the account that is supposed to be debited, you debit it, but you have to multiply the amount involved by 2. So to correct this error now, you are going to open purchases account. Purchases account, if you multiply the amount involved by 2, the amount involved is 700 times 2. That will be 700 times 2, which is 1,400. So you have debited the purchases account with 1,400. Then you credit cash account with 1,400. Here you have the purchases as your narration. Here you have cash as your narration. So that is how to correct the errors that doesn't affect the trial balance. So I want to solve a comprehensive work example, so involving errors that the trial balance cannot disclose. Example: the following transactions occurs in the books of XYZ Limited. You are required to write up the journal entries which would correct these errors. Narration is not necessary. A. Purchases of motor vehicle for 10,000 naira was debited to the purchases account. B. Drawing in form of 600 naira cash have not been recorded anywhere in the books. C. Telephone expenses of 500 naira were incorrectly debited to electricity account. D. Cash purchases of 320 naira was incorrectly entered in the books as 230 naira. E. A payment of cash for wages and salaries of 2,000 naira was entered on the receipt side of cash account and on the credit side of wages and salaries account. So that is the question. So that is the question. Solution. You are going to have the journal entry. Journal entry. Your journal, you will have the debit and the credit side. You will have both the debit and the credit side. So, the debit side and the credit side. And you were told that narration is not necessary. Serial number, then details or particulars. The first item is A. You have purchases of motor vehicle for 10,000 naira was debited to purchases account. Purchases of motor vehicle for 10,000 naira was debited to purchases account. This is purchase of motor vehicle. Remember, I told you earlier that purchase in account means goods bought for resales. The purchase of motor vehicle can only be regarded as purchases for an entity whose trading business is on the buying and selling of motor vehicle. If their trade is on buying and selling of motor vehicle, then they can record it as purchases. But to the entity that deals in the buying and selling of goods, if they purchase motor vehicle, that vehicle is not bought for resales. So their intention is for the usage of the vehicle. So this will be wrong to record it as purchases. So that means the entity have committed an error known as error of principle, because the transaction has been recorded in a wrong class of account. Instead of debiting purchases account, instead of debiting the motor vehicle account, they have debited the transaction to purchases account. So what you do is that the motor vehicle that is supposed to be debited, motor vehicle account that is supposed to be debited, you go ahead and debit it. Now let's open the motor vehicle account. Motor vehicle. No, motor vehicle is the receiver. Motor vehicle is supposed to be debited. You debit the motor vehicle with 10,000. Then remember, purchases account has been debited in error. The purchases account has been debited in error, so you are going to credit the purchases account in order to eliminate the 10,000 which have been debited to the purchases account in error. So you have purchases account, which is 10,000 naira. So that is for that. B. Drawing in form of 600 naira cash have not been recorded anywhere in the books. This is an error of omission, since it has not been recorded anywhere in the book. When you withdraw cash, drawings in account means what you take from the business for personal use. So this will affect drawings account and cash account. Since it has not been recorded anywhere, the entity is withdrawing cash. Cash goes out of the business. Cash is the giver, while drawings is the receiver. So you debit the drawings account with 600 naira and you credit cash account with the same amount. So now let's record that. Drawings account, which is 600. Then you credit cash account with 600. Remember, narration is not necessary. C. Telephone expenses of 500 naira were incorrectly debited to electricity. This is also an error of principle. So it is a telephone expenses. Instead of you debiting telephone expenses, you have debited the electricity in account. So what you do is that the telephone expenses that is ought to have been debited, which was not debited, you debit it. The electricity was debited in error, and what you do is to credit the electricity account so that the amount you credit to electricity account will not cancel the 500 naira which has been debited to the electricity account. So telephone account is supposed to be debited and it have not been debited. So let's debit the telephone expenses now. So we have telephone expenses, that is 500 naira. And electricity account was debited in error. So you now credit electricity account so that will not cancel the amount that have wrongly been debited to the electricity account. That is C. Then D. Cash purchases of 320 naira was incorrectly entered in the books as 230. this is an error of original entry. The first thing to do is to find the difference between the two amounts. 320 minus 230, then you have the difference of 90. Cash purchase of 320. The 320 is the correct amount, but was recorded as 230. That means the amount debited to purchase account, no purchase is the cash purchase of 320 was incorrectly entered in the books as 230. That means purchases account has been debited with 230 and cash account has been credited with 230 because you are given out cash. Cash is the giver, purchases is the receiver. So you credit cash, you debit purchase. But instead of you debiting purchases account with 320 and credit cash with 320, you now debit your purchase with 230 and you credit your cash with 230. That means the amount recorded in the books has been understated. So to increase that amount now, you find a difference. And the difference between the two amounts is 90. 320 minus 230, you have 90. The purchases was undercast because the amount recorded is below the actual amount. Purchases has been undercast and cash has also been undercast. Remember, purchases account supposed to be debited and the amount debited to the purchases account has been understated. So you debit the purchase account with the difference in order to increase the purchase account. Now, let's have our purchase account. Purchases account. The difference is 90. That is 320 minus 230. Then you have the difference to be 90. So you debit the purchases account with 90 in order to increase the amount that have earlier been debited to the purchases account, which was 230. Now the cash account has equally been understated. So you credit the cash account with the difference, which is 19 as well. So as to upgrade the 230 which has been credited to cash to 320. So that is for that. Then E. A payment of cash for wages and salaries of 2,000 naira was entered on the receipt side of cash account and on the credit side of wages and salaries account. No, a payment for wages and salaries, that means cash is the giver, while wages and salaries is the receiver. So since cash is the giver, cash account ought to have been credited, while wages account ought to have been debited. But the entity went ahead to debit cash and credit wages and salaries. That means this is the error of a complete reversal of entry. That is, the account that is supposed to be debited was credited, and the account that is supposed to be credited was debited. And I've told you that where that is the case, to correct the error, what you need to do is to double the amount involved. The amount involved is 2,000. If you double the 2,000, that is 2,000 times 2, and that will give us 4,000 naira. So the account that is supposed to be debited is wages and salaries. So you now debit wages and salaries with 4,000 naira. Then the cash account, you now credit it also with 4,000 naira. Now let's record that. So we have wages and salaries. Wages and salaries, that is 2,000 times 2, and that will give us 4,000 naira. Then you now credit cash account with the same amount. That is the entry required to correct that. Remember, since you have debited wages and salaries and 2,000 have been credited to wages and salaries in error, that 2,000 which have been credited therein will reduce this 4,000 to 2,000. That means indirectly the amount you have recorded so far is 2,000 naira. So that is all about that. This is the part 1 of my presentation on correction of errors. The part 2 shall cover the errors that will affect the agreement of the trial balance. If you look at all the examples I've given, there is no anywhere where suspense account has come in. So, meaning that we only have suspense account where the error will affect the agreement of the trial balance. And should be expecting that in part 2. Thanks.